when it reported in February, FirstRand said first half normalised earnings increased by 26% to 5.8 billion rand. Net income dropped to 6.59 billion rand from a restated 12.6 billion rand. The bank declared a dividend of 44 cents per share. We've seen the aggressive marketing out there. We've seen the increase in market share in the unsecured loan arena. They're going after it aggressively as well. Ron, your thoughts on FirstRand as an investment case?
I think it's a very good investment case. I've been invested in this one for the last year. The returns have been absolutely superb. The growth is coming, as you say, from unsecured loans. Westbank are really lending very heavily in terms of car finance and the like. They do have an Africa plan. I think it will come into focus in due course. They are very, very aggressive. I think the advertising is very clever. It's very, very, very slick.
And it's working for them. They are certainly increasing their customer base at the expense of ABSA and Standard Bank.
Yeah, but hang on, let's go back a step. FirstRand has finally now emerged from all of its restructuring. We know that for the last decade, since they bought the Barclays business from Anglo, that they've been in a state of perpetual reorganization. You can now finally buy FirstRand, which gives you the whole of FNB and the whole of Rand Merchant Bank and Westbank. So that's the first thing checked off. But these results for the 6 months were the first time you could actually see that that was what you're buying. So all you can do from a valuation point of view is take them, gross them up for the second half and say, well, where are they? What is the scale of the business? What is the PE?
Because it's a completely different base now.
Yes,
you can't actually go historically.
Look, and if you bought them a year ago, that's great because you got all the bits and pieces and the shrapnel and the MMIs and the RMIs, and then you swap them with
you're doing very well on
so
your stock picks. I think we must take your picks very seriously.
I think it's fine, but do you realize that it's basically got the same scale roughly? It's a little bit smaller than Standard Bank at about 140 billion odd market cap. It's on the same sort of 13 PE based on recent earnings. The question really for Sizwe and Michael and the gang is whether they can now take this thing and really be perceived in the marketplace as the growth stock in the banking sector. I guess they might, but I'm not as optimistic that the Steve ads and all that really make much of a difference when you come to the bottom line.
Who do you bank with?
Personally, I bank with Standard and with the business banks with FNB. So I'm not,
This is not a personal preference.
Yeah,
you're putting
comparatively,
out on the table.
I think they're quite similar. And everybody hates their banks except old people who realize they don't have to go to the branch anymore. Hallelujah. But the real money comes still in banking from the sort of corporate and transactional banking. I think maybe we need to focus on that a bit more.
We will. Ron, who do you bank with? Just so that we can
with Nedbank.
With Nedbank. So completely out of the fray. We're not even talking about Nedbank tonight. We'll have to do it further down the line. So let's talk about this corporate banking element.
Look, half of the money that banks make still comes from corporate and investment banking, forex trading, which is
who has the biggest
disastrously
share? Who has the biggest share of the corporate banking environment?
I think FNB has a big base there, and I think Standard Bank still is scale-wise the largest. In the retail environment, ABSA is a bit stronger, but obviously FNB is catching fast. So I think they're all much of a muchness. And obviously Standard Bank has vehicle finance, and so does FirstRand in the form of Westbank. But that other stuff is highly profitable. It's a bit lumpy. The trading environment is a lot tighter. All of that stuff about the Volcker rule and how you can't trade like a gangster with the bank's balance sheet anymore, that's all gone. And what worries me is that they know it. They can see the return on equities are not what they used to be, and they're kind of not quite sure yet whether to embrace the fact that they've got to cut costs radically to get ROEs back up again.
Ron, do you think that Paul is being fair on his criticism of FirstRand as an investment play?
I'm a little bit more positive on FirstRand, although it's come a long way, Bronwyn. I believe you've got to look at the cycle. We've had, 3 years of a down cycle, 3.5 years. I believe that we're going into an upswing of 2 or 3 odd years, obviously depending what happens in Europe, whether we can get our economy going in terms of infrastructure and spend and the like there. You've also got to have a look at what is happening in terms of growth in LSMs in South Africa. 5 million people have entered LSM, I think 7 to 10. These guys are consumers. These people are buying homes, they're buying cars and the like. And I believe this is going to be a long-term driver in terms of South African banking on a 5 or 10 year view. This is why banking per se, I think in South Africa is going to be a growth area. Your current PEs relative to perhaps your stores are still looking very attractive, as are dividend yields. You're probably on about
3.8% dividend yield on FirstRand.
On FirstRand, on a forward dividend yield in Standard Bank, probably around about 4.25%. I'm still looking for 15% plus growth in Standard Bank from a very, very low base.
Which
I agree with all of that.
You're going to ask Ron a question now.
No,
you
I
got
agree
confused
with all
about what role you're supposed to play.
But I want to just jump on to that issue of where this stuff is all going. Go back in history. If you look at BOE, in 2000 and whatever it was, the South African bank regulator stood up and saved them. And in fact, they were so pleased with what they achieved, they made Tom Boardman the CEO of Nedbank. Basically, we live in a world...
I hope you've got a point, because I'm not following you on this story.
Basically, we live in a world where every single bank is too big to fail. So the regulators in this modern world in which we live have decided that nobody who's deposited money with a credible regulated bank is allowed to lose money. The Lehman Brothers thing was a total disaster. So the world in which we're going in is one where they will always make sure that nobody gets into trouble. But what's the quid pro quo for that? The quid pro quo is that you've got to have much more capital and you're not allowed to engage in any risky behavior. So banks are going to be boring and their profits are going to be much lower than people have
because they can't go after the risk to create the reward. Is that what you're saying?
They can't like let it run when the going's good and give all sorts of people crazy money.
So boring banks in your book. This is where we're going in the banking environment in South Africa.
And that's why the PEs are low, and that's why I worry that you can't just assume we're going back to the old cyclical.
No, I'm not saying that, Paul. No, what I'm saying basically, we're an emerging economy. We have people growing up into LSMs. You've got urbanization. You have people going up the scale in terms of corporates and in government jobs. These, to me, are going to be the big macro drivers in future there. Okay, the regulatory thing has been tightened, which is a good thing. Hopefully, unsecured lending is not going to get out of kilter. We're not going to have another Unifa. We've got solid banks. We don't have the peripheral plays in anymore that we had in earlier years. So,
and what about the bank fee issue? You think in the consumer market they're going to be allowed to charge the big fees?
Not necessarily. There will be pressure on that then. But
there'll definitely be pressure on
but
the fee
transactional
side.
Volumes are increasing.
Yeah.
Gentlemen, we have to leave it there. We could argue all night on the banks. Hot or not in your book for FirstRand?
I'm still hot on FirstRand, but not as hot as Standard Bank in terms of a longer-term sustainable turnaround.
Standard Bank's the hottest. Have you got any further thoughts, hot or not, on FirstRand?
No, I mean, Michael, my Twitter friend, is going to be hating me, Michael Jordan, that is, but I'm not hot on it. At current levels,
don't think you're
too
special.
much baked
Michael
in
is
the
everyone's
cake.
friend on Twitter. So don't think you're special on that.